Good afternoon, ladies and gentlemen. We have with us Mr. Rajnish Kumar. Sir, it was, very half introduction of yours. If I could elaborate a bit, that you have been advising many of the star unicorns and star startups in India, and one of the most sought after advisor in our part of the world. Plus, you also sit on the HSBC's Asia Pacific board. Sir, we will be taking a lot of your expertise and experience to understand many of the things. But I'm told that you'll be beginning the session with a keynote speech. So may I invite you to deliver your keynote address, sir?
A very good afternoon, ladies and gentlemen. First of all, my thanks to India Today Group for giving me this opportunity. The session also, I think the title is very wonderful. We are talking here about time, we are talking here about ideas, and we are talking here about money without which this world doesn't move. So on my left, here is a person who has all the money, I understand, to make it move. So not necessarily in the same order. Let me first put my thoughts around idea. And here, let me start with a quote by Albert Einstein, who said, "Creativity is seeing what everyone has seen and thinking what no one else has thought." And so true. The apple was falling for the tree for thousands and thousands of years. But it was only about 350 years ago that Newton saw it, thought about it, and wrote his laws around motion and gravity. But that was a different time, not very long ago, 350 years if we look at the human history. But the age of technology in which we live, 350 years is a very long time. Now things happen in seconds and minutes and hours. Just to put the things in context about how things are changing so fast. So 30 years ago, we were not aware of Microsoft. Windows came around 1990. We were not aware about Facebook. The mobile or smartphone, which now is in everybody's pocket, the first iPhone came in 2007. Internet banking, maybe the protocols were established in 1983, but the number of users at the beginning of the century, 40 million, now around 5 billion. Number of smartphone users, almost entire universe. 80 to 85% people have smartphones. So if we just introspect and look that half of our life of many people who are of my age, it was all without all these things. Newer generation, it's different. They have started with all these things. And just again, to give you an idea about what is happening on the technology front. So this is about like last 35 years. But when we are talking in this theme about tomorrow. So what I believe that what we did in 35 years, maybe it will happen in 5 years. So very difficult to see in the future. But future of mobility. There's a talk in India about Hyperloop, where using Hyperloop you can travel between Delhi and Mumbai in 2 hours. So maybe, as of now, a stage of imagination, but maybe tomorrow it will be a reality. Already they have advanced quite a bit on that front. And no conversation about future is complete without the role of artificial intelligence It is the buzzword. You take any sector and people talk about AI. Be it health, be it agriculture, be it education, be it space, defense, whatnot. So every aspect of human life, it is all about AI. And while the industrial revolution, it augmented muscle power, AI, it is augmenting human power. And a combination of human intelligence and artificial intelligence is going to break all frontiers and barriers. And the world, imagine 25 years from now, maybe what was in the realm of movies and Star Wars, that will all come true. So this is the power of intelligence and technology. Let me touch a little bit about the technology, how and what is happening in India and what is happening on the startup front in particular. So I happen to be the chairman of BharatPe, a startup. After spending 40 years in a legacy institution of the size of State Bank of India, I came to BharatPe, a startup, in 2021. And just to share a very small story, how it started, and this will give you an idea about how ideation happens, and some of the ideas flourish. Of course, many of them do not. So it's a very fascinating story about our two young people. One was in the first year of IIT Delhi, and one was a dropout, not a technical person. But when I interacted with him, I consider him to be one of the best brains in technology, without having formally been educated in technology. And the problem, when they used to buy for payments, so go to any merchant and there are multiple machines or multiple QR codes for scan and pay. And what they thought, that why can't it be integrated and become interoperable? And in the first 6 months, they designed it and put 500 such QR codes which were interoperable, single QR code, so convenient for merchants. So a problem being solved, and ideation coming from students. And from where the money comes in, if they have to explain. So first round of money comes from the parents, 50 lakh of rupees. The second round comes from angel investors, 2 or 3 crore rupees from family, friends, it gets expanded. The first round, what is called A series round, that happened when the investors like Sequoia Capital, who was big in investing in startups in India, they took a bet, and in 2018 they invested at a valuation of $7 million. In 2021, when the last round happened, what is called Series Z, it was worth 2.8 billion. So you need idea and you need capital. If capital is not there, as I said, without money, nothing happens in this world. So you definitely need money. And what type of money we are talking about? So at the different stages of development of any business or corporation, the nature of capital, it changes. So initially it is, as I said, that it is your family, friends, what we call angel investors, and then the venture capital, and then ultimately the enterprise grows, private capital, then public capital, then bank capital. So the doors open as you grow and as you demonstrate the success of the idea. So the idea can come in a flash, like it came as a flash in Newton's mind, or idea can come when you look around the problems around you and you try to solve them. And what I can say about India today, that because we are a population of 1.4 billion people, it has its own problems. And what all these young people, 80,000 of them at the last count, startups, and which is going to be estimated to be 180,000 by the year 2030. So what are they trying to do? They are looking at problems. They are looking at the problems where the legacy institutions, they have not looked that way. They are looking from a new lens. They are doing ideation and they are trying to solve those problems. So what did BharatPe do? It solved the problem of small merchants. It solved the problem of payment simplified. And now we have a very flourishing merchant network in tier 2, tier 3, tier 4 cities. It is not metro or large cities. Those merchants who could not access formal credit markets, we enable them to access credit markets because we have access to their cash flows. And this is only one small example. There are bigger examples like Zomato, which is a worth $22 billion company. Again, an IIT graduate. We had a great EdTech. Unfortunately, today it has become a little bit of a not so respectable word. But we had an EdTech where the valuation was 22 billion and was expected to go to $40 billion. And here brings me to the last point in this conversation. It is about not only the capital. We are talking here about smart capital. And to me, smart capital means that spot the opportunity, take the risk, which you are good at, but at the same time, what has become important and which is a big learning from the experience with the startups in India, or maybe elsewhere also, is about we need a good blend of entrepreneurship, young energy, and gray hair, or people like with no hair like me. If you have that, a blend of experience, a blend of young energy, and good ideas, which may be new or which may be oriented towards solving a problem, then a country like India, I think, returns are to be made. Because I have always believed that the international capital in particular, it doesn't go anywhere for the love of that country. It goes where they can have decent return on capital, or rather the best return as compared to any other opportunity. So if you ask me, with all my experience in India, in the banking and financial sector, and now with the new age tech company, or what you call fintech, it's a land of opportunities. And why I say so, we have a very good startup ecosystem. The companies are present in all sectors. You name it. Agri-tech, I said, health tech, education tech, space tech, defense tech also we have seen. We have got some flavor of it in last few days about the defense tech capabilities also. So it is all about technology now. And the government support for startups is huge. They want our entrepreneurs to flourish. A very active startup encouragement program which was formulated in 2016. I'm not going into the details. We have the technical minds. IITs, of course, are a very well-known brand, but India produces more than 100,000 engineers. Maybe they are not from the top institutions like IIT. But as I gave the example, having a technology or technical qualification is something, and having that band of mind, it's a bit different and it can also succeed. So with this, I will conclude, and then I think we have a question-answer session. And if there are more questions, I will be happy to answer that. Thank you very much for giving me this opportunity.
Rajnishi, you have made my job a lot easier by giving us a very beautiful case study. The question which comes to my mind is that, even in Dubai, there are a lot of sovereign funds, Dubai, Abu Dhabi. RDI has already started, their office in Ahmedabad, Gift City near Ahmedabad. So, they are backing some of the young early stage entrepreneurs. How do you, since you are advising many of them, how do you, advise them to make their projects or their entrepreneurial ventures more bankable for these sovereign funds? Especially, when we all understand that early stage entrepreneurials are, high risk capital, and sovereigns are generally, they look for yield goals and, low risk projects. So how do you advise them? What sort of things go in your mind and your prodigy's mind, sir? Mike is yours.
So a little bit of correction here. These are not bankable projects. If they were bankable, then I at State Bank of India probably would be funding them. So the capital which we are talking about, so all investors, they have their focus. And some of the sovereign funds, they have all. So their funds would be invested in public markets, their fund would be invested in private markets, and they may be having funds for early stage or what is called venture capital. So the venture capital, the investing philosophy is very different, and maybe one or two out of their investments succeed. But whatever succeeds, it makes up for the loss for the rest of the year. Am I correct? So that is how it works. So as I was mentioning, that anyone who has that risk appetite and wants to invest, the key things to look at is, one of course is about whether the venture would succeed or not succeed. When somebody is putting money, they believe that it will succeed. But the idea may not succeed. That is also a given inherent risk in venture capital. I would say that they must insist on that how the company will be run and governed. There, the presence of people with experience that can help in avoiding the pitfalls we saw with a couple of investments which people made in startups in India. But this is a capital which has higher risk appetite and it gets higher reward. It's a simply pure risk reward matrix. And the bank capital is a low risk, low reward capital. We give money at 9%. But a venture capital, they would expect 20x, 30x. And that is the case. The BharatPe I was talking about. So from 7 million in 2018 to 2.8 billion in 2021 or currently. So it is 20x. So that is the beauty of the venture capital. But there may be one BharatPe and 8 others where you lose money. But the average return, I think, the expectation is around 25 to 30% return. So it's all about the same principles apply for investment, whether it is equity or capital. One is, who is the entrepreneur, what is his intent, and about the success of the venture, because a lot of ideas being tried, as I said, some will succeed and some will not succeed.
Thank you, Rajnishji. Here I bring Siddharth Balachandran. He is Executive Chairman and CEO of Boomrec Corporation. Siddharth, you are investing in India through many of your vehicles. What is your philosophy, when you evaluate the Indian ventures? How do you want to invest? What sort of thinking goes into your mind before putting your penny?
Yeah, good morning, everyone. Pleasure to meet you, Mr. Kumar. See, I think the philosophy is and has always been, as a fundamental investor, a pursuit of permanence. I think that has always been my philosophy, and I've tried to manifest that into various decisions that I make. So the first question in extension to that was, what is permanence, the definition of permanence? And then I sort of extrapolated that into something that is intangible, which is, so for me, democracy is a must. When I look at a market, I think, so if the political system reflects a modicum or a sustainable sense of democracy, then that becomes a favorable market for me. And then the next stage of my decision making would be to find institutions that mirror the country. So for me, if my sense, my definition of permanence is my country, India, and the next stage would be to find institutions that mirror India or reflect India. And for me, one of the first investments that I had made, and which has gained reasonable significance of eyeballs because of the growth, not of the institution only, but also of India, which resonates in that institution, is Bombay Stock Exchange. So when to put it in numbers perspective, as you were saying, it is not necessarily that only a startup can have that sort of elasticity in numbers. Because the Bombay Stock Exchange, I think in 2009, 2010 was my first foray into that. And it had a market capitalization of 2,000 crores, which at that time felt very insignificant for me, because you're talking about a population base of 1 billion at that time, and 145 crore now. So yesterday, Bombay Stock Exchange crossed 1 trillion. 1 trillion rupees in market cap. And you're talking about a 15-year period. Now, if that isn't significance, then I don't know what is. So I think you could sort of cite me as an example of this translation of this philosophy into an actual decision in a 175-year-old company or a 150-year-old company. So India is blessed, as he just mentioned, not only to have a healthy startup ecosystem. I think we have one of the most robust regulatory framework in the world. And that helps to sort of make your decision and corroborate that decision with actual action. So yeah, so this is in a nutshell what I think.
Thank you, Siddharth. Rajnish, if I can bring you in this conversation, you have seen both the world's private sector as well as through State Bank of India, largely a public sector staff. When people like Siddharth see a great story in India, promising companies, what sort of institutional framework do you think needs to come in where people can discount some of the over-amplified valuations and make their investment based on durable and inclusive values? What sort of corrections do you need? Do you want to have?
No, that again depends upon investors' perspective and what kind of investors they are. So Siddharth has already outlined his investment philosophy. So some investors or in capital is just for quick money. They work on technicals. They don't look at fundamentals even. Mostly playing in public markets. And the long-term investors, then they would look at fundamentals. They will look at corporate governance. They will look at the history of an institution and then take their call. Their returns would obviously be not fast. They need patience. But ultimately, in the long run, institutions like where I worked, the State Bank of India, it has consistently given good, decent return. Not spectacular, where you make 100% return in 6 months, but consistent, 15, 20% return. Some years may be bad, but it averages out. So it is the investment philosophy and the nature of the capital that would determine that what they are picking. And as there is a different type of capital on the supply side, there are different type of companies on the demand side. So you have to match. Whatever your investment philosophy, there is available opportunity. It's all about matching.
Any institutional framework do you think back home we need to put in place so that these investments are safeguarded, channelized well, and informed well before making the bets?
No, we have a very robust framework. When it comes to investments, SEBI is one of the most advanced and tech-savvy institution. This institution itself is 30-year-old, and but the kind of framework which they have set up, whether for public markets or alternate investment funds, through which most of the private capital comes, I don't think there is anything missing, but always there is, like time to time, demands come and they respond to that. But Siddharth already, I think, covered that point, that when it comes to regulation and laws and the safety of the money or the protecting the investors, the laws are very clear, they are well laid, and I don't think there are any gaps there as of now. If there is any, Siddharth will tell.
I second that.
Siddharth, you have been investing in it from education to infra in India. So what sort of new promising areas you are looking at? We are sitting in Dubai, and many of your peers must be taking cues from you before getting into it or buying into the Indian opportunity. So what sort of new areas are you looking at, or are you still comfortable putting in your money in the low risk areas, or any promising areas you want to explore?
See, I think risk is a word that is cliched, overstated, misunderstood. I believe that every investor, every person, when you start the day, undergoes a certain amount of risk. Obviously, that is reflected into tangible asset classes like money and gold and equities as well. Now, to get back to your question, I think India's potential cannot be measured in terms of pure dollars or rupees, whatever currency systems you have in place. I think India's potential is reflected in each and every aspect of the 145 crore population base that we have. Then that is our capital. Now, if State Bank of India is able to lend so much, it has a reasonable, sizable capital base. Imagine if India was an institution like that. The capital is something that is elastic, intangible, and powerful. So each and every person of that institution becomes an asset. Now, the beauty is there are only 11 crore of that 145 crores who are actually investing. And if we are number 4 in the world in terms of GDP, and if America is number 1, their investor base penetration is 30%. So I'm not even talking about 30%. Even if you become a 10%, even if you become a 15%, you are going to see a multiplication of the GDP and in as less a time as possible. So the 30 trillion target that we have, 2047, many people think it's impossible. I think it's possible. Probably a couple of years earlier. So the sectors that I would consider important in terms of both revenue generation and wealth creation, banks and financial institutions. I think that is a multi-tiered growth opportunity waiting. And this is not, I'm not talking about new age banks or nationalized banks, nothing of that sort. I think every institution in that sector is an explosion of wealth waiting to happen. Now, when it happens, how it happens, we cannot go into details. It will happen. But that is something in terms of opportunity, which I am currently I've started accruing, and my accrual process takes a few years, but I've started, and SBI has been my first, and LIC my second. So yeah, so these are the kind of
BharatPe your third. Fintech opportunity.
Yeah, that's his present job. He's heading BharatPe, so aptly, marketing his new office. Rajnish ji, we are coming closer to the conversation's culmination. If you can help us in understanding that, Indo-UAE collaboration, UAE's capital and India's scale, do you see some areas where, many funds like Siddharth should, look at, and some opportunities which they might not see right now, but eventually they come up?
No, I think a lot of investment, and I heard all the conversations which happened in the morning sessions, and we heard about SEPA. So Indo-UAE, I think there is some sort of a natural affinity. We understand each other well, and the capital, I think UAE is a capital surplus country. India, we are capital deficient country. Domestic capital is not enough and sufficient to achieve the kind of growth we need to have. So currently we are talking about 6.5, but if we really want to be a developed economy by 2047, as envisioned by our Prime Minister, then we need this growth rate to go up to at least 9%. And how can we achieve 9%? Only when there is investment. And there's a perfect match. We need capital and UAE has capital. And then, as I said, that capital is just in physical terms or is money. But when you have that cultural affinity and understanding, people to people understanding, good cooperation and understanding at the highest political levels, then I think it's a perfect synergy, and framework is already there. There can be improvements in the framework. Anybody who has patience, any foreign investor, that is my always an advisor, you need a little bit more patience when you are dealing with India. But the returns expectation from the investment in India, they can be met, and particularly India is at the cusp of such a time in its history where we are not looking back. It's a confident country, it's a young country, it has young demography, it has technology prowess. So what else do you need?
Thank you, sir. Thank you very much. Thank you, Siddharth. Thank you, Rajnish. Ladies and gentlemen, you had a really insightful session today. We had understanding and experience of today as well as yesterday, and a promise of future, both coming together at the stage. Thank you very much.